Ladies and gentlemen, good day and welcome to Ajanta Pharma Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Yogesh Agarwal, Managing Director of Ajanta Pharma Limited. Thank you, and over to you, sir.
Thank you. Good evening and welcome to all of you. With me, I have Mr. Rajesh Agrawal, our Joint Managing Director, and Mr. Arvind Agrawal, our CFO. I'm sure all of you have received the bonus shares in their accounts. Coming to the results, they are already there with you, and I'm happy to share that the quarter witnessed a strong growth momentum across all our major markets of branded generic business. I'll take you through business-wise performance for the Q1, along with the comparison of the previous year for the same period. Let's begin with the emerging market branded generic business, which comprises of Asia and Africa. In Asia, during the Q1 2023, our sale was rupees 240 crores against 165 crores, posting a very healthy growth of 45%. Just to caution, the growth appears a bit elevated, primarily because of the slightly lower base in the Q1 2022, which was impacted because of the second wave of the COVID, which created some disruption at that time. Coming to Africa, during the Q1, our sale was 168 crores against 125 crores, again posting a very healthy growth of 34%. Here also similar caveat that the like-to-like in the earlier Q1 that was slightly suppressed because of the COVID disruptions, which makes this current Q1 look a bit more elevated. But overall, the branded generic business of Asia and Africa, it contributed to 43% of the total revenue during the Q1. And our exposure to these markets were rupees 408 crores against 291 crores, posting a very healthy growth of 41% over previous year for the same period. We continue to stay laser sharp in these markets to identify the gaps and the opportunities. And we continue to execute very clinically so that we can post superior growth as compared to the markets. During the quarter, we launched 10 new products in Asia and Africa across various countries. Let's move to the US generic business. US business contributed 19% to the total revenue during the Q1. We registered the sales of rupees 179 crores against 168, posting a modest growth of 6%. This modest 6% growth of 6% was despite the severe price erosions, which we have seen in the US market, and also in absence of any new product launches. So we continue to have 39 products on the shelf. During the quarter, we filed one ANDA and also received one tentative approval. At the end of June 2022, we had 20 ANDAs awaiting approval with US FDA. Though our filing for the quarter has started on the little slower side, but we have a number of products at advanced stage of filing. So we will see the accelerated filing in coming quarters in Q2, Q3, Q4. And with that, we are still aiming to file 10 to 12 ANDAs in the financial year 2023. Coming to Africa institution, this business contributed 8% in the total revenue during Q1. We registered the sales of 77 crores against 54 crores, posting a growth of 44% over previous year same period. As I have been mentioning earlier, the institution business remains unpredictable. It depends on the funds availability and the requirements of the procuring agencies. So with this, now I hand over to Mr. Rajesh Agrawal, our Joint Managing Director. He will take you through India business. Thank you, and over to you, Rajesh.
Thank you very much. Good evening to all of you. Let me discuss some of the key highlights of India business with you now. India business contributed 30% in the total revenue during Q1 FY23. Sales stood at rupees 279 crores as against rupees 229 crores, posting a healthy growth of 22% during the quarter. This includes sales from trade generic of rupees 33 crores against rupees 27 crores in previous year same period. We launched 7 new products in Q1 FY2023, with 2 products being first to market. Our performance has been satisfactory, and it has been on the back of new product launches, market share gain, and price increase. As per IQVIA MAT June 2022, we have posted healthy growth in all the therapeutic segments and exceeded industry growth rates across all therapies. We have 3 of our brands appearing in top 500 in the IPM now. Again, as per IQVIA, we improved 1 rank to rank 28 in June 22 from being 29th ranked in March 22. We are glad to inform that we have also improved our ranking within therapeutic segments as well, by 1 rank in cardiology and dermatology and by 2 ranks in the pain management segment over the last quarter. With this, I will now hand it over to Mr. Arvind Agrawal, CFO, to take you through the financial performance. Thank you, and over to you, Mr. Arvind.
Thank you very much. Good evening to all of you, and warm welcome to this earnings call. For ease of discussion, we will look at the consolidated financials and provide year-on-year comparisons. Let me take you through key financial highlights for the quarter. It was an excellent quarter with 27% growth in revenue spreading across all the markets. Total revenue stood at rupees 951 crores against rupees 748 crores. Against the guided material cost of 25% to 26%, Q1 FY23 raw material cost saw at 29%. The reasons for the same are one-time inventory write-off of 2% due to expiry, increase in raw material and packing material cost due to global inflation impacting about 1%, US price erosion is about 1%. From the above impact, we will be able to recover 1% from the price increase we have taken across markets and INR depreciation against USD. So, going forward, we estimate the cost of goods sold to be close to 26% in that range. Coming to other expenses, we saw significant rise in the export freight cost. Pre-COVID, our freight costs have been around 6% to the sales, which got escalated to 8%, translating to almost rupees 14 crores adverse impact for the quarter. This external factor beyond our control have adversely impacted the profitability to that extent. R&D expenses was at rupees 54 crores against rupees 45 crores for the quarter. R&D expenses stood at 6% of revenue, which will continue to be at this level. EBITDA for the quarter stood at 222 crores against rupees 220 crores. EBITDA was 220 crores last year. EBITDA was lower in the quarter at 23%. cost, which is due to basically expiry in the different markets.
Okay.
And then we have the raw material, packing material price increase due to global inflation, that is about 1%, and US price erosion is about 1%. So total about 4% impact is there compared to what we have indicated earlier, 25-26% indication which was given earlier. I think there is an increase of about 4%. And out of that, the one-time inventory write-off is 2%, so that will not be there. And other two which are there, out of that, as I mentioned, we should be able to recover about 1% from the price increase which we have taken, where we will get the full impact during the year.
The dollar.
Yeah, also the dollar effect.
Got it. So just as a clarification, you highlighted 26% to be the EBITDA margin to look for FY23 full year.
Yeah, you can say so. I think 26, 27, that is the range, yes.
Okay, so that helps. Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Harsh Beria, a professional investor. Please go ahead. Harsh Beria, your line has been unmuted. Please go ahead with the question. We would request you to unmute yourself from your handset and proceed with your question. Due to no response, we'll move to the next question, which is from the line of Dino Pati Parampal from Incred Capital. Please go ahead.
Hi. Just a question on the US business. The price erosion, how are you looking at it, say, the last quarter versus the quarter before that, and what is the latest? That is, what are you seeing right now versus what you saw in last quarter? How is it progressing?
So I think big price erosion happened in the earlier quarter, and thereafter it has stabilized. So we have not seen price disruptions in the current quarter. But whatever price erosions has occurred in the previous quarter, that effect will continue, and which is what CFO has mentioned, I mean, that 1% impact we are receiving in the costs, which has got elevated. But for now, the price erosions have kind of tapered down significantly. They have quietened. We are estimating that probably the price erosion should come back to the level of 5 to 8%, which was the normal range also for the price deflation, which will happen.
Got it. Just one more question on the US market. You have this product filing, generic version of Chantix.
Yeah.
Any update on when do you expect the approval for the product and launch?
Unfortunately, no, I don't have a date I can share with you. We are still working with FDA to seek the approval for that product. So there are some technicalities which are involved. Let us see. I mean, we are at it. We believe that it's a good, decent opportunity. So still, I don't have a date which I can share with you that how close we are for the approval on that.
Okay, great. I'll join back with you. Thank you.
Thank you.
Thank you. The next question is from the line of Nimish Mehta from Research Delta Advisors. Please go ahead.
Yeah, thanks for taking my question. Aside from Chantix.
Sorry to interrupt you. May I request you to come on the handset mode? I think you're on speaker and the audio is not very clear.
Okay, just one second.
Thank you.
Is it better now?
Yes, it is. Please go ahead.
Yeah, so my question is actually related to another US product filing, Vimovo, which is naproxen and esomeprazole magnesium. Any idea, again, when can you launch? Because I understand this could also be a decent launch, and if I'm not wrong, you can launch upon approval. So any idea about the timeline would be helpful here.
Yeah, so for that I can share with you. By and large, the feedback we have from the FDA is that the ANDA review is complete for that. We are just awaiting for the facility inspection. They have said that the approval can happen after the facility. So now we are waiting for US FDA to announce when the inspection will happen.
I see. So it can well be in this year as well, the launch.
We hope so. We hope so. I think it's just linked with the FDA. Now we have seen number of pre-inspection approval happening in the industry. You must have also seen number of companies are getting the inspection. We have a few times written to FDA saying that we are awaiting and we are ready for the inspection. So as they have started with other companies, I'm sure we must be somewhere on the roster there. So hopefully sooner than later they announce. And it's primarily just waiting for the inspection now. So once the inspection is through, we are hopeful that we should be able to secure the approval for this product then.
Understood. And lastly, if I may, on Trokendi XR, which is topiramate, I understand the FTF would be launching in January next year. Are we likely to launch soon after that, as in after 180-day exclusivity?
We have a tentative approval on that. I don't have the top of the mind the launch date on that. I think maybe our team can circle back on that.
Okay, but do you think it is an interesting opportunity?
Yeah, of course. Of course, I think it's still a good product to have. Agreed. At least we are glad to have the TA for that because otherwise some other products they got linked with the facility inspection. So
right, which is why this question.
I just don't have a date on when we have the date for the launch, but we are very close to launching it.
The case is still ongoing, right? It is still not settled, if I'm not wrong.
I'm really not. I don't have the answers tip of my tongue to give you on that. But the fact is that we have got a TA, so there's no holding back. It's, I think the date when the exclusivity or the patent expiry will happen, we'll seek on the approval and probably will be able to get the product. But having said that, I think let me just reconfirm with my team and then we'll circle back to you on the details of that.
Okay. So overall, with these kind of opportunities, can we say that the US business can see significant growth in the next 2 years or so? Because these are all important and low competition opportunities.
Yeah, so that has been our outlook. Traditionally, also our current product portfolio. So if you see, we've been selective in identifying the products which are complex, have some other barriers, maybe the bioequivalence barriers, whatever it could be. So we have some good products. Unfortunately, the approval got locked. Now, hopefully the inspection start. So yeah, we have some good products which we have already filed, and there are some good products which are at advanced stage of filing during the current year also. So they all can bring good value to the company.
Okay, understood. Thank you.
Yeah.
Thank you. The next question is from the line of Abdul Kader Puranwala from Elara Capital. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. So, would it be possible to break the India growth into volume, price, and new launches?
Right. Growth, I think we have the breakup. We have taken the possible price increase. I will share the breakup with you.
Price increase we have taken is about 7%.
That is the contribution to the growth.
Yeah. So 7% is the contribution to the growth. That out of the total growth, 7% is price increase.
Okay.
And 6% is the volume growth, and rest of it is the 3% is the new product launch.
23 and 24, keeping in mind a couple of new product launches would also be on the line for the second half?
Yeah. So we don't give out the region-wise EBITDA margins there, but naturally you can very well assume because of the severe price erosion, which last year was we've seen 15 to 18%, it has adversely impacted the EBITDA margin of the US business. So that is one part. And second, for the going forward, currently we have some good products which are awaiting approval only for the FDA inspection. Two of them we already discussed earlier on the call, and there are some more products which we have filed. So now it's difficult to predict, but if we get the inspection and approvals, we could be launching some products in Q3. If that inspection gets delayed by a quarter or so, it could be in Q4. On the current business, current product, we are looking at the flattish kind of growth for the current year. Even if the growth is there, it could be in the low single digit, maybe 5-6% without the new products. As and when the new products will come, it will add to the growth as well as to the EBITDA margin.
Sure, sir. Understood. I'll get back into the queue. Thank you for answering.
Sure.
Thank you. The next question is from the line of Rashmi Sancheti from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. So just to follow up on US business, what are the driving? This quarter we have not launched any product, but any plain oral product or any number of launches that we have planned for the next 9 months in FY23?
No, as I said, I think currently whatever tentative approvals or advanced stage of review, they are all awaiting inspection. We have 4 products. FDA has told that the review is complete. They are awaiting the approval. So right now we don't have any visibility. So as I guided you, I think we are waiting for the inspection to happen to unlock the new product approvals. Without that, we are expecting to post a 4 to 5%, probably 5% growth in that vicinity. As and when the new products get launched, then that will add to the growth and the profitability.
Okay. And on basically India business, what is the guidance now, for FY23 and for FY24? I mean, earlier we used to say that, we would be doing around 12 to 15% sort of growth in India. But considering that this quarter was pretty high growth, what is your guidance on that part?
We continue with the original guidance that we have given, which is mid-teens for the India business. Even though quarter one is exceptional growth that you see, high double-digit growth, but let's not forget that Q1 last year the base was quite low because of the second wave and deadly wave of Delta. So some part of this growth is going to come off as we go along in quarter 2, quarter 3, which were quite robust last year also. So at this point, we would rather be a little bit more careful in giving the forecast. So we are expecting mid-teens.
And similar is for Asia and Africa branded business also, right?
Yes, you are right.
Okay. And coming to the EBITDA margin, as you said that, the raw material cost, whatever 300 basis points more, which we have seen in this first quarter, at least 100 to 150 basis points is something which can come off in the subsequent quarters. And considering that, quarter one was a low EBITDA margin quarter, you still expect that, in FY23 we would do around 25 to 26% after assuming that quarter 4 is normally a very soft quarter for the company?
You are right. I think quarter 4 is always soft, and I think we should be able to take the EBITDA at that level.
So basically you are saying that the EBITDA margin would be in the range of 25 to 26% for this entire year?
Should be in that range, yes. 1% here and there is okay, but then that should be the range.
Okay. And what about FY24? Are we expecting any normalization next year?
Too far away to discuss. Right now focus on the current year, but I think we are seeing the unprecedented times. So if the inflation cool down, as CFO said in the opening, the freight costs have adversely impacted 14 crores in the quarter. So I think if all those comes down, then naturally it will get added to the EBITDA and the PAT.
But any focus on cost efficiency or anything which can lead to at least 100-150 basis point improvement in FY24? That is what I wanted to understand.
That is always the focus, and that is what we always strive to do. The only thing is there are certain external factors which are beyond our control, like the freight cost or the inflations, etc. That is where we don't have the control. But otherwise, whatever is in our control, I think we are 100% sure that we would like to, ensure that the, savings are brought to the business.
Okay. Okay, sir. Thanks. That's it from my side.
Your question, there was a call on the talk on the Topiramate also. Just wanted to highlight, so the matter is still under litigation and we don't have a visibility on the launch of Topiramate. So I just wanted to share that across with all on the call.
Okay, sir. That's it from my side.
Yeah.
Thank you.
Thank you. The next question is from the line of Ayush Mittal from Mittal Analytics. Please go ahead.
Good afternoon, sir. First of all, congratulations on a very good performance. Sir, I've missed the trade generic number. I'm not sure if that was shared in the call today. Can you please share that number for the quarter?
Quarter is 33 crores against last year, previous year, the same quarter is 27 crores.
Okay. So can you talk a bit more about this segment? What exactly are we doing in this trade generic and what has been driving the growth and what is the strategy going forward?
In trade generic, we are doing pretty much exactly the same as what some of the other companies are doing. These are all, it's a push strategy that is used where it's being sold by the pharmacies. And the differentiator is we are focusing more on the chronic segment in the trade generic. And we have been able to grow pretty well in the last 3 years. We hope to continue the growth in the coming 2 or 3 quarters also.
Okay. And these products are in-house manufactured or are these outsourced?
It's a mix of both.
Okay. Thank you. That's from my side.
Okay. Thank you.
Thank you. The next question is from the line of Kunal Randeria from Edelweiss. Please go ahead.
Good evening, and thanks for giving me this opportunity. Sir, on the Asia and the Africa branded business, is there an element of channel filling here so that, there might be some lumpiness in revenue in the coming quarters?
Element of what?
Channel filling, stocking, and the inventory at the dealer level?
No, not really.
Okay.
As we've guided, I think the remaining quarters also, we are guiding towards the mid-teen growth. So.
Sure.
I think what you are really trying to understand is that these higher growth is something which may be because of the channel filling, but it is not so. Actually, the earlier quarter, last quarter, as we mentioned earlier also, that it was the Delta variant quarter where everything came to standstill. So because of that, they were very low. If you see our 4 quarters, that was the lowest quarter which was there. Afterwards we picked up the numbers in these markets. So I think it is absolutely normal.
Got it, sir. That's helpful. So Yogesh, you also mentioned that, you expect the price erosion to sort of, revert back to historical levels. It's very similar to what Teva also said in their call. So I'm just wondering, what is it that, is changing on the ground? Have the pharma companies said enough is enough, now we can't sell below a certain point? Or what is changing on the ground?
What is changing is, I think, the fact that during the COVID, when approvals were not coming, companies were under pressure to increase the business. So I think they were overstepping in trying to get the market share of each other competitors very aggressively, which is what we saw leading to the price erosion. So I think industry has understood that this is not helping. In fact, it is hurting all the companies. So I think that kind of awareness and sense has prevailed. So we see that undue hyper competitive activities are kind of normalized. And now hopefully with that, the assumption is that it should come back to the historical level price erosion. And hopefully now the new product approvals also are started to, we see the pre-approval inspections coming for the number of companies. So that also new approvals will start to come in. So the pressure to increase the business from the existing products will also kind of reduce a little more.
Okay, fair enough. And just one more, if I can squeeze in this for Arvindji. Arvindji, from your annual report, I saw that your freight cost has gone up by around 30% annually in the last couple of years. So any other line items you would like to point out, maybe some of them which may not be in your control that have been sort of leading to higher OPEX?
I think apart from freight, there is no other element which is there. Normal inflations are definitely there in the cost, but not too much. Mainly it is the conscious decision which we are taking in terms of enhancing our allocation to the branded generic business. So that may increase, but otherwise I think it is absolutely normal.
Got it. Thank you and all the best.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Ritika Agarwal from Value Quest. Please go ahead.
Hi, sir. Thank you for taking my question. My first question is on what is the cash utilization avenues or deployment that we think about going ahead?
See, it's very simple, because I think this is the thing which is going on for the last 2-3 years. We are looking for acquisitions. We are scouting for acquisitions. We are always looking at all the opportunities which are coming in the market. So certainly that is one area where we can deploy this cash. But other than that, I think our major capex is already completed, so there is no need there, and there is no other major utilization of cash which is going to be there in the near future.
Right, and acquisition in the domestic front is what we are scouting for.
Yeah, basically it is only in domestic market, that India market, we are looking at the branch.
Right. Okay. And just to confirm, you mentioned you are seeing branded markets, Asia and Africa, growth to be around 15% for the next 2 years.
Mid-teens, yes.
Mid-teens, yeah. Sure. Okay, sir. That's it from me. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. The next question is from the line of Tushar M from Motilal Oswal. Please go ahead.
Yeah, thanks for the opportunity again. So on the domestic formulation side, the increase in prices on the NLEM portfolio, will that get reflected to Q onwards, or there is some inventory still left in the system?
No, I think it has started to reflect in Q1 itself, and I remember we discussed this, I think, a couple of quarters ago, and I had mentioned that we will take the full increase. So we have done the same, and it has started to reflect by the end of Q1 itself. Of course, you will see more reflection going forward.
And there has been also talk about some, again, price cap, price ceiling in the Independence Day, some media news flow. Any comment on that?
I am only aware of it as much as you have information on. It's only a media report that I have also read. So that's that.
And just one last clarification, while you have already explained it, but just so the margins which you are guiding for doesn't include the opportunities like Chantix or Vimimo, right?
No, they are excluding those ones.
And any query pending for Chantix, which which we are working on, and accordingly the product approval will come?
Yeah, as I said, we are still in dialogue with the FDA on the requirements they have given us, which we are furnishing them. So it is work in progress.
Okay, so any timeline you would like to give in terms of you responding to US FDA?
No, unfortunately, I don't have, but maybe not a quarter or two. I think that is what I have visibility. But after that, how quickly it can come through, let's wait and see.
Thank you, sir, and all the best.
Sure.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. Ladies and gentlemen, you may press star and 1 to ask a question at this time. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Gagan Thareja from ASK Investment Managers. Please go ahead.
Yeah, good evening, sir. I hope I'm audible.
Absolutely, yes. Go ahead.
Sir, first question is around the Africa piece. If you could delineate the Africa branded business growth between the Franco-Africa and the Anglo-Africa segments, and also give us a flavor of, what's the growth in Anglo-Africa looking like, and what's the salience in sales of Anglo-Africa overall?
No, unfortunately, we are not sharing the data split Anglo-Franco. But as you are aware that our bigger presence is in the Franco-Africa. But both the markets, they are performing well for us, Anglo as well as Franco. Both are showing positive growth.
Okay. And likewise, would it also be possible for you to give us some flavor, if not quantitative, at least directionally, of the Asian branded generic markets, Philippines, Iraq, Jordan, and the CIS markets separately, some idea of how you see them evolving for you over the coming 2-3 years?
Unfortunately, I think we are giving this guidance on the continent basis. But again, I can repeat the same thing. I think all the markets are performing well. So it's a blended. It's not that only one market is good. Maybe one may have slightly higher percentage than others. But all the geographies are performing well for us, all the markets.
Okay.
As I've said in my opening remarks, we are staying very laser-sharp focus in all these markets to identify the opportunities, to increase the market share, to bring new products, identify the gaps, increase the productivity, increase the manpower. So it's a constant battle every day, and that is what we are seeing the results. So we continue to remain optimistic about posting the higher than the industry growth in all these countries.
And is your sales in all of these markets driven by your own sales force, or is there, partially a distributor-led model and partially your own sales force? If you could give some idea about that.
So that's the good part about our business. All our branded generic business in the exports also, they are all driven by us. So we decide the product, we decide the price, we decide the promotion. Distribution just does the cost of distributing the product for a cost. So we are able to decide our course of growth. So that is where the beauty is.
Okay, sir. And on tax rate, if you could give us some guidance for this year and next year.
I think this year we have given the guidance of about 21%, and that is what we should have. Even in this quarter also we have this almost similar percentage. For the next year, I think will be difficult at this point of time, but I think we should see in this range only. Should be around 20-21%.
Okay. So just one final question. In US, the FTC is investigating the trade practices of pharmacy benefit managers. And the inspection is fairly comprehensive. Do you foresee this sort of changing the U.S. landscape from a pricing perspective in the years to come? If the outcomes are adverse for pharmacy benefit managers?
It's a complex matter. Unfortunately, I do not have a view on that. But let us see. It's a big industry shift which we are talking about there. So how fast, and the changes are not easy to make, a lot of structural changes which are being talked about. So I think it's going to be interesting to see how this evolves and which way it settles, if there are any changes happen, significant changes happen. So I don't have any view on that to share with you.
See, if in the eventuality that PBM practices are sort of brought more in line with the customer needs, because PBMs tend to keep the discounts that they get from innovator companies for themselves without passing it on. Do you see this in any way helping the cause of generic companies in US?
I don't know, from generic point of view, I would assume it would be neutral, because ultimately we are competing with other generic companies. So how the channel keeps the margins is a separate matter. So it would probably, for a generic company, would not have such a huge impact. Maybe for the brand companies, there could be some changes which may occur.
Yeah, because some of the litigations, which are ongoing in this regard, also point out that generic medicine access to certain classes of patients was denied by the PBMs, and I think that's what the whistleblower suit seems to indicate. So I was just wondering if there is any significant possibility that this might help to bring generic penetration in a bigger way there.
It's a complex subject. I think it's difficult to discuss that on a call, investor call.
Okay. Thank you, sir. That's all from my side.
Thank you. The next question is from the line of Alisha Mahawla from Envision Capital. Please go ahead. Alisha Mahawla from Envision Capital. Your line has been unmuted. Requesting to please go ahead with the question.
Hi, am I audible?
Yes,
hello.
You are.
Yeah. Hi, good evening. Thank you for taking my question. So firstly, how much percentage of our portfolio is under NLEM?
About 12%.
12%. Okay, sure. And
of the India business, huh?
Yeah, sure. And the step up in revenue that we've seen in the Africa business, is this sustainable? Like, is this the kind of quarterly run rate that maybe we can currently work with?
As I mentioned earlier, we are looking at mid-teens growth going forward. So this quarter, the growth looks slightly higher because of the last year corresponding quarter slightly low due to the COVID disruption. But we are optimistic to outgrow the industry. That's for sure.
Just to clarify, we're talking about the Africa institutional business, doing mid-teen kind of.
No. I'm talking of Africa branded generic business. The institution business is very unpredictable. That depends on the fund availability, the requirements of the AL products, malaria products in that country. So there are a number of factors which are beyond our control. So we have no. The thing is, it's a lumpy business. So it can go very high in one quarter, it can drop in second quarter. So for institution business, we are not giving out any guidances.
Understood. And just one last clarification. I believe you're mentioning earlier in the call that there are 4 products for which we're awaiting US FDA inspection, which could be launched in H2, assuming the inspections are on time. Is that correct?
Yeah. So I have said we are awaiting for the approval and inspection. And once the inspection happens, whatever time FDA takes to give the approval for the ANDA, we'll be ready to launch the product.
And these 4 is including Chantix?
Chantix has one more element. Chantix is not linked with the FDA inspection. That is, we are still in the litigation.
Okay, so the 4 is excluding.
I'm sorry, I'm getting mixed up. Copyright is linked with the inspection. Chantix is still under approval. That is still under the review with the FDA. That is not linked with the FDA inspection.
Okay, understood.
Yeah.
Thank you.
Yeah.
Thank you. The next question is from the line of Chirag from Ratnatraya Capital. Please go ahead.
Hi, good evening, sir. Am I audible?
Yes, please.
Yeah, thank you so much for taking my question, sir. I just have one question on the Africa branded generic business, and this is sort of a more generic question. Given that our as an investor, our understanding of the branded generic space in Africa is limited, could you help us with a little bit more color on what what is going on in this business, and currently how are you seeing traction? And I'm asking this question more from the point of view of that generally we have been, guiding towards mid-teen sort of growth. But if you look like even at a 10-year history, growth seems to have happened in a more lumpy manner, even in the branded generic space. 13 was a great year, 15 was a great year, and so on and so forth. Could you just help us understand, is it sort of field force deployment that becomes a little lumpy, or is it related to some other sort of a little bit of a cyclical factor? What is it that drives that business? Can you just talk about it for a little bit more? That's all I wanted to ask. Thank you.
No, if you see our Africa business, or for that matter, any branded generic business, whether it was Asia or Africa, it has been very consistent. You see our track record of last 5 years, 8 years, 10 years. The growth percentages may have varied. Maybe some years we may have grown at 8%, some may 18%, some at 25%. But there has been a consistent growth. It has been never a lumpy for us that we degrew 10% and next year we grew 25% and again.
Sorry,
so it was a very, and that is the outcome of very fundamental things. We believe in getting identifying the product, launching the product, identifying the gap, good product selection. If you see our investor presentation also, we are talking about a smart and beautiful product portfolio. So that is where it begins, and then after that, bringing the product to the life, promoting it well, taking it to the doctor, to our own field, is what gives us the sustainability and the scalability both. So it's a consistent effort of continuously adding more products every year, working for the product for next year and thereafter year. So there is a lot of work in progress. Even in the countries, we have a lot of products under approval across our markets. As and when we get the approval, in coming years they'll be coming to the market. So it's a combination of a lot of things, very similar to what we do in India. Increase the market share from the existing brands, add more products, add more people. So yeah, I think that's the fundamental of any branded generic business, whether it is India, Africa or Asia.
Any other questions, Chirag?
Thank you. That was all from my side.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Yogesh Agrawal for closing comments.
Yeah. Thank you everyone for joining this call. In case there are any further questions that remain unanswered today, please reach out to our investor relations team. Thank you so much.
Thank you everyone.
Thank you.
Thank you. On behalf of Ajanta Pharma, that concludes this conference. Thank you for joining us, and you may disconnect your